Next, Vibhav Kapoor, Group Chief Investment Officer of Island Invest Group, joins us live from Mumbai. Vibhav, good morning and thank you for joining us. Vibhav, I guess depending on whom you're asking, you will get a different answer. If you're a bull, you would say, look, the storm has come and gone. And if you're a bear, you would insist that global concerns are not over and election uncertainty is here to stay. So which side of the argument you are on?
Well, I'm neither a bull nor a bear at this point.
You've got to take a stand. Markets is all about taking a stand, Vibhav.
The market has entered a very dull phase and there are no immediate triggers to this market. On the negative side, you have the impact of the taper, which I think will continue and will constrain large amount of FII flows coming into the markets. And you also have this uncertainty on China. So the global, particularly the emerging markets, are in a little bit of negative sort of mood at this point of time. On the positive side, you have a better current account deficit, so the rupee is not crashing along with or like many of the other emerging market currencies. It's not under pressure. Fiscal deficit is getting under control. But then you have the elections coming. So I think there are no big triggers for the market either way at this point of time. And therefore I see a range-bound market to continue as it has been for the last 3-4 months. It's going to continue like that for some more time.
Vibhav, we've got the vote on account coming up next Monday. What's the sense that you're getting? Could it be anything material market moving, or do you think the market is now only going to wait for the big one, the general elections for any and every queue?
No, the vote on account is constrained by itself because you can't have any new direct taxes, you can't have any changes in direct taxes, you can only have changes in indirect taxes. And whatever announcement the finance minister may make in terms of some policy measures are also not going to be taken seriously by the market because these are only interim, these are only a statement of what the government would do if it came back to power. So a lot depends on the election. So I don't think the vote on account has really any major significance.
So would it be only the general elections then, Vibhav?
Well, as far as domestic factors are concerned, I think the general elections obviously are going to be the most important. Not the most important, I think they're going to be critical. And then of course you have the global factors which will continue their play over the next 2-3 months till the elections take place. And there obviously I think it's reasonably clear that unless the US data starts to become really bad, the tapering will continue and therefore you will have that negative sort of impact of that on emerging markets including India. And China of course is the wild card. It's always difficult to say what's happening in China. So if you get more negative news from China, then the emerging markets may be under more pressure. If you don't get negative news from China, then that could be a neutral impact on the market.
Vibhav, I'm just going to take you back to the entire vote on account topic. Do you think somewhere finance minister could really surprise the market with some kind of a tinkering when it comes to excise duty and custom duty because the regulation does not allow him to change anything when it comes to direct taxes, but indirect taxes I'm sure he can tinker around with?
Well, he could, some marginal things here and there, but they would obviously be only relevant to that specific industry where he makes those small changes. It's not going to have a market-wide impact. And even there, I don't think that he will do some very major changes in indirect taxes. So I think I don't think it's really going to have a major impact. No.
Vibhav, for next 6 months, so let's say till elections, to your mind, what could be the broader signpost for the market?
Well, as I said, the signposts are largely going to be international, global in nature till the elections happen. Of course, the markets are generally smart, so I guess going closer to the elections, they will try and make up their mind on what the election results are going to be or are likely to be. And therefore, it's not necessary that the markets may take a view on the election result just only after the results have been announced. So you could get some sort of a trend maybe, when the election process begins, say in early April and end March. So that could be a signpost. Apart from that, if you look at the economic picture, I don't think it's going to change very much as far as the Indian economy is concerned in the next 2 to 3 months. So that's not really going to influence the markets too much. We know that the RBI is not keen to lower interest rates unless inflation comes down substantially. And before the elections, we have only one more policy that is in the end of March, where I don't think anything is going to happen. So it's going to be, I think, largely international and some trend on how the elections are going.
Vibhav, you were just talking about as to how you're cautious on data flow from China. How would you approach the metals pact back home then, given the kind of sensitivity it has to any and every news coming out of China?
Metals are always a difficult sector to trade because they are dependent so much on global events and how prices move. It's really difficult to make out. But if you see weakness in China, or you believe that China is going to the economy is going to weaken further, then obviously it would be good to be a seller in metals. And if you believe China is going to remain strong, then you need to take it on an individual basis and see which stocks are worth buying. But if you look at, for example, the steel sector, some of the stocks are already trading at very reasonable valuations. They've gone up 80-100% over the last 3-4 months. So there doesn't seem to be too much upside from there.
Vibhav, United Bank of India has reported a NPA number which is nothing, short of scary, 11% plus. Do you think the NPA problems in the PSU banking space are far from over? Because if one bank is suffering, I'm sure with a lag effect, the entire sector will suffer more.
Yeah, unfortunately, the problems don't seem to be over yet. See, as long as the economy is not growing and inflation, that is interest rates are high, the NPA problem is going to persist and could even become worse. And then you have this provision of the RBI saying that, you can do restructuring only till March of this year. So I think in the last quarter, that is the current quarter, you could have a lot of restructurings beginning to happen. And then the banks need a lot of capital under Basel III requirements, as well as because of the fact that the NPAs are increasing. So definitely, yes, the banking sector, particularly the PSU banks, are still in a fair amount of problem, and you would need, I think, the economy to revive and interest rates to come down for them to start getting out of this problem.
Vibhav, auto ancillaries are fast emerging, a pocket wherein stocks have really been shooting up. Do you like anything from that space?
Well, that's largely because of the fact that the US and particularly the European economy seems to be on the mend now, and a lot of these auto ancillaries actually are big exporters to Europe particularly. So yeah, that's a sector definitely which looks promising. But obviously, you don't have very large companies in that sector, so you need to really look at each company and decide which has a strong balance sheet and which has a strong product portfolio which can gain from this uptrend in the European and the US economy.
Vibhav, in this current leg of decline, along with PSU banks, private banks also have corrected. ICICI Bank is down below 1,000 rupees. HDFC Bank is almost at 620, 630. Even IndusInd Bank is suffering. Do you think it's time to buy into private banks now?
There are two things happening there. One is that the FIIs have very large stakes in all the private banks, and with FII inflows having stopped because of the global factors and even some outflows taking place, I think the first casualty always is those sectors and stocks where the FIIs have very large positions. So that's preventing the stock from going up. And secondly, of course, there is always this lurking fear that if the PSU banks are getting into such a big problem on NPAs, then could the private banks follow to some extent at least. So these two factors are keeping, I think, a lid on these stocks. I think they are good trading bets at this point of time. So you look at valuations and you decide a valuation range And if they come down to the lower side of that valuation range, you buy, and if they go to the upper side, you sell.
What's the view, Vibhav, that you're getting on the telecom pack? The spectrum auction is going to continue today as well, it being day 10, and it's been a hugely volatile space off late. Is it better to just stay away and watch out for what the results of the auction are first?
Oh yes, I think that's another sector which is which looks so promising, but this new event has sort of put a dampener again on that sector. The auction prices have really gone up, I think, to a little dangerous levels now, and that will have an impact on the existing companies. Also, the fear that the pricing power which was coming back to this sector may now get dissipated because Reliance may come into this sector in a big way. And so, there has been a fair amount of negative news, and the stocks have reacted to that. So while they may not fall much from here, I think, but the upside has definitely got capped, which was not so earlier.
Vibhav, what is the right way to look at all the drama which currently is happening in the spectrum bidding? Is this a sector-specific problem, or the reason why telecom companies are paying top dollar is because they see visibility, 1 year down the lane, 2 years down the lane?
No, it is simply because of the fact that, in some of the circles, they have to renew their licenses. So the 900, for example, in the 3 metropolitan cities, and they don't want to give that away because that could be costly for them. Also, for data and for 3G, you need the 1800, and there is, as I said, one more large player which has entered the field, and obviously that is causing this the auction prices to go up. That, of course, doesn't mean that there isn't a good opportunity for the long term as far as the business goes, particularly in data. We know that India is still very, very small as far as data is concerned. So that is a area which will grow very significantly over the next 5 to 10 years. But then the investment is also becoming pretty heavy. So the returns are going to be back-ended and not immediate.
Look at the way the PSU bank index is actually falling down. It's the top loser. It snapped its 7-day rally as well. You've got names like Bank of India, BOB, which are the top drags. And this, by the way, is after a one-off move on the Bank Nifty yesterday in an otherwise completely lackluster market. Vibhav, how imperative is it going to be in terms of the RBI action, which is going to dictate the market mood going forward? And God forbid, if there is another rate hike, do you think that could be hugely detrimental to the market move?
Yeah, another rate hike could definitely be a bit detrimental, but I don't expect another rate hike in the end of March, because while inflation is still high, it is trending down a little bit now. We saw the CPI numbers a little better than expected yesterday, and growth also is pretty weak. So I would think the RBI is more likely to maintain the status quo in the end of March rather than have a rate hike. But if they were to do so, yes, it would be negative.
Vibhav, the easy answer on the street is that wait for the general election and then make your trading or investment opinion. But, it's too naive to assume that markets would wait for the election. I'm sure the adjustment and the readjustment will start ahead of the numbers. I mean, that's typical markets for you. They always tend to discount or factor in the event before it actually occurs.
That's exactly what I said earlier, Nikunj, that the markets will probably not wait till the end of till the results are actually announced. So you'll probably get the market will try to, decipher some sort of results, how they are likely to be once the election process starts, and the trend will definitely adjust to some extent. But then, if you remember, in the last elections in 2009, the market was taken completely by surprise, and we got 10% upcircuit or 15% upcircuit just after the elections. So I think before that, you are still likely to have a range-bound market. If the market feels that the election results are going to be positive, then you could be at the upper end of that range, and if it feels they're going to be negative, then you could be at the lower end of the range when the election actually happens.
So, Vibhav, final question. As a Chief Investment Officer, what will be your positioning ahead of elections? Would you be going long into the event? Would you be short into the event?
No, definitely neither short nor long in a big way, because as I said, you don't know, election results can surprise you very significantly. But as I said, I think the real thing here is, one, to have some amount of cash when that event approaches, so that you're not caught on the wrong foot, but be reasonably invested and, have a mix of, say, defensive sectors, I would call them, for example, like the export-oriented sectors, like IT and pharma, and maybe a little bit of the cyclicals, provided you get them at the lower end of the valuation range.